In this business of trading, most people lose not because the market beats them, but because they never learned how to sharpen their own edge. They think the game is about picking tops and bottoms, or chasing every price tick like a hound after a cent. But that's not trading. That's gambling with style. And today, we're going to talk about how to sharpen that edge, how to make yourself into the kind of trader who knows when to wait, when to strike, and when to sit absolutely still. You might remember in the previous video on how fear destroys good trades, we talked about how emotion can turn a good setup into a bad decision. Well, that same emotion dulls your edge faster than anything else in the market. An unsteady mind can't read a chart, can't read the tape, and can't hold a position when the tide starts to turn. So before we can talk about sharpening your trading edge, we've got to talk about discipline. Because discipline is the grindstone you sharpen that edge on. Now let me tell you something I learned early on, and paid dearly for. The market is never wrong. Only your opinion is. Think about that for a moment. How many times have you argued with the market? How many times have you held a losing position because you knew it had to come back? That's a dull edge right there. When you stop listening to what the market's saying and start listening to your own pride, you've already lost. The sharp trader listens more than he speaks, reads more than he predicts, and reacts without hesitation when the tape confirms what he's been waiting for. Do you know what most traders do instead? They clutter their screens with indicators, signals, and 100 flashing lights. All because they don't trust themselves to read the story that's written right there in the price. Price is truth. It always was. You can dress it up in moving averages or stochastics if it makes you feel smarter, but at the end of the day, the only real edge you have is your ability to interpret price action better than the next man. That means patience. That means practice. That means learning, and coming back sharper the next day. Now, ask yourself this: do you really know your own system? Or are you still trying to find one that fits your personality? Because here's the thing. A trading edge isn't something you download from the internet or copy from someone's strategy. It's something you earn. It's carved out of your habits, your temperament, your ability to sit still while the crowd panics. The market rewards clarity, not confusion. And if you don't know exactly what gives you your edge, maybe it's pattern recognition, maybe it's tape reading, maybe it's just timing, then you're not trading, you're guessing. Every great trader I've ever known understood one thing: your edge comes from specialization. You don't need to trade every move in every stock. You just need to trade the right ones. The setups that speak your language. The situations you understand as well as a card shark understands his deck. Why do you think most traders blow up? Because they're always swinging for the fences. They forget that trading isn't about constant action. It's about selective precision. When the tape says, wet, you wait. When it says, go, you go in with confidence because you've done the work, because your edge is honed sharp and ready. And yes, it takes time, longer than most people have the patience for. But tell me, what profession doesn't require mastery? Would you trust a surgeon who learned by watching a few YouTube videos? Then why should the market reward someone who won't study it like a craft? A trader's wealth doesn't come from luck. It comes from skill multiplied by discipline. Wealth, real wealth, is built the same way a sharp knife is forged, through heat, pressure, and repetition. When I was learning the game, I used to write down every mistake, every hesitation, every trade that went wrong. I'd ask myself, was I wrong because of the market, or because I failed to follow my own rules? You'd be surprised how often it was the latter. The edge dulls not from bad luck, but from neglect, and the only way to keep it sharp is to study your own behavior more carefully than you study the charts. You remember how in that last talk about how fear destroys good trades, I told you fear doesn't vanish. You just learn to control it. The same principle applies here. When you sharpen your trading edge, you're not removing risk. You're managing it with clarity. The sharper the edge, the cleaner the cut. But that also means the higher the precision required. A dull blade hacks through the market, but a sharp one slices only when it should. And you can't sharpen that edge by watching others. You do it by trading small, observing, learning, refining, day after day. Here's a question. When you sit in front of your screen in the morning, do you already know what kind of day it is? Trending? Range? Bound? Choppy? Because your edge depends on that awareness. The market doesn't owe you opportunities every day. Some days the best trade is no trade at all. That's when most traders lose their edge. They get restless. They forget that doing nothing is a decision. A sharp trader knows his weapon is his patience. Too many traders try to make the market fit their plan instead of adapting their plan to the market. You can't force the ocean to move your way. You can only ride the wave it gives you. That's why chart reading is an art, not a science. You read the mood of the market the way a captain reads the sea. You sense when it's turning before the others do. And when you act without hesitation because your edge isn't built on hope. It's built on observation, repetition, and restraint. There's a rhythm to every stock, every market. Your job is to tune your ear to that rhythm. Some traders do it by watching volume, others do it by watching price levels or momentum shifts. But no matter your style, your edge sharpens with familiarity. You trade your setups so often that they become second nature. You stop guessing, you start recognizing. Now, the most dangerous thing that can happen to a trader is not a loss. It's a big win made on luck. Because that win convinces him his edge is sharper than it is. Then the market humbles him. I've been there. Every trader with scars has. The only way to keep your edge real is to test it, over and over, across changing market conditions. If it holds up, it's real. If it fades, you go back to the grindstone and sharpen again. You see, in trading, the sharpest edge isn't the one that cuts others. It's the one that cuts through your own illusions. Every time you face greed, fear, or overconfidence, your edge dulls a little. Every time you stay calm, wait, and act only when the market confirms your signal, you sharpen it back. The market rewards patience, not prediction. So ask yourself, right now, is your edge sharper today than it was 6 months ago? Or have you been swinging the same dull blade, hoping it'll cut better this time? Because that's the question that separates the speculator from the professional. Your trading edge is earned through discipline, not discovery. Most traders come into the market searching for a secret formula, a magical indicator, a special setup, or a system that promises certainty in a game that's built on uncertainty. They think if they dig deep enough, they'll find that hidden key, that single discovery that will turn losing into winning. But that's not how it works. The edge isn't something you stumble upon like buried treasure. It's something you forge with time, effort, and most of all, discipline. The market rewards preparation, not curiosity. When I first started trading, I thought the secret was in the method. I jumped from one system to another, looking for something that would never fail. Every new idea looked like the answer, until it didn't. And when it didn't, I blamed the system instead of looking at the one constant across all those trades myself. You see, discipline doesn't sound exciting. It's not glamorous like discovering a new chart pattern or building an algorithm, but it's the one thing that turns any decent strategy into a weapon. Without it, even the best strategy in the world becomes useless. Discipline is what keeps you from overtrading when the market goes flat. It's what stops you from averaging down on a losing position because your ego can't handle being wrong. It's what reminds you that cash is also a position, and often the best one when the tape turns confusing. The truth is, the edge most traders are chasing is already within reach. They just don't want to do the boring part, following their rules with unwavering consistency. That's why so many traders fail. They're looking for shortcuts in a business that has none. Ask yourself something: how often have you broken your own rules? How often have you told yourself, just this once, and then paid for it? Every time you do that, you dull your edge a little more. The market doesn't punish you immediately for a lack of discipline. Sometimes it even rewards you, and that's the dangerous part. Because it teaches you bad habits under the illusion of success. You make money breaking your rules once, and suddenly, those rules don't seem so important. Then one day, the same behavior wipes out a month's worth of gains, and you realize your so-called arge was nothing more than luck disguised as skill. The traders who last, the ones who grow, they understand that discipline isn't a restraint. It's protection. It keeps them grounded while others get lost in noise. The disciplined trader waits for his setup, the one that matches his plan, his timing, and his risk tolerance. When it appears, he acts with precision. When it doesn't, he doesn't force it. He doesn't try to make the market move just because he wants to trade. That kind of patience, that kind of self-control, is rare, but that's exactly what builds an edge strong enough to survive the chaos. You might have noticed in the earlier talk about how fear destroys good trades. Fear comes from uncertainty and the loss of control. Well, discipline is the antidote to that fear. When you know exactly what you're looking for, and you refuse to act outside those boundaries, fear has nowhere to hide. Your rules give you structure. Your structure gives you confidence, and confidence, not arrogance, sharpens your edge with every trade you take. A disciplined trader doesn't react to every flicker in the market. He knows that prices fluctuate to shake out the weak hands. He knows most people can't sit still, so they overtrade, overthink, and overcomplicate. But he's seen it before. He's watched the tape long enough to understand that time works in favor of the patient, so he waits. He waits like a hunter, not chasing every sound, but waiting for the right moment when the odds align. That's the essence of discipline. It's the art of restraint, and restraint in trading is as valuable as timing itself. Every losing streak tests your discipline. Every winning streak tempts you to abandon it. That's the paradox of this business. Success can be just as dangerous as failure if it makes you forget what brought you there. A few lucky trades, and suddenly you start taking liberties. Skipping your confirmations, doubling your size, moving stops. The market gives you rope, and if you're not careful, you'll use it to hang yourself. That's why a real trader keeps his process tight no matter the outcome. He doesn't get sloppy after a win or desperate after a loss. He just follows the plan. Discipline is also about emotional neutrality. The market doesn't care about your feelings, and neither should your trades. You can't let excitement cloud your judgment, nor can you let fear freeze your hand. Every decision should come from logic, not impulse. That's why journaling, reviewing, and self-assessment matter so much. They're not chores. They're sharpening tools. They force you to confront your weaknesses, your biases, your tendencies. Over time, that awareness turns into control, and that control turns into your edge. Some traders think having discipline means being rigid. It doesn't. It means being consistent. You can adapt your methods, evolve your strategies, but your discipline stays the same. Your process, your patience, your respect for risk. The market will change, it always does. But if your discipline is solid, you'll adjust without losing your balance. Because in the end, it's not the method that keeps you in the game. It's the mindset behind it. So when you think about your trading edge, stop looking for the next big discovery. The secret isn't out there. It's in how well you can execute what you already know. Most traders already have enough information to be profitable. They just don't have the discipline to stick to it. They chase complexity because it's easier than facing their own inconsistency. But the trader who learns to master himself doesn't need more tools. He needs sharper focus, stricter patience, and the kind of inner control that no indicator can measure. The truth is, markets reward discipline because discipline builds reliability, and reliability is what creates confidence, not in the market, but in yourself. Emotional control keeps your edge from dulling under pressure. In trading, pressure isn't an occasional visitor, it's a constant companion. The market will test your nerve at every turn. It will tempt you with quick profits, scare you with sudden drops, and confuse you with mixed signals. How you respond to that pressure determines everything. Because in truth, the market doesn't beat most traders with price movement. It beats them through emotion. Every tick of the chart pulls at greed, fear, hope, and doubt. And if you don't control those emotions, They'll dull your edge faster than any losing streak ever could. A trader without emotional control is like a soldier without discipline, dangerous to himself and unprepared for battle. You can have the sharpest strategy, the cleanest chart setups, and the best analysis in the world, but if your emotions take over the moment money's on the line, all of that preparation goes out the window. How many times have you seen a trade turn against you, and instead of cutting it, you held on, hoping it would bounce back? How many times have you taken profits too early because you couldn't stand watching a small gain fluctuate? Those moments aren't about market skill, they're about emotional weakness. And every one of them chips away at your edge. You can't eliminate emotion. No trader can, but you can control how it affects your decisions. The market has a way of exposing your temperament. It doesn't matter how confident you are when you're flat. The real test comes when you're in a position and the price moves against you. That's when fear whispers in your ear. That's when your pulse quickens and your mind starts searching for reasons to justify holding on. The disciplined trader recognizes that voice and ignores it. The emotional trader listens and loses. You remember in that earlier video on how fear destroys good trades, we talked about how fear turns rational traders into reckless ones. The same principle applies here. Emotional control is the shield that protects your edge from that fear. When fear takes over, logic disappears. You stop trading the market and start trading your feelings. You move stops, chase entries, and overanalyze every tick. The chart becomes a mirror reflecting your anxiety instead of a story showing opportunity. But when you keep your emotions in check, you read that chart as it is, not as you want it to be. Trading, at its core, is a game of probabilities. The outcome of any single trade doesn't matter. Only the sum of disciplined decisions does. But emotions make you forget that. One bad trade feels like failure. One good one feels like victory. And soon, you start associating your self-worth with your P&L. That's when you're finished. Because once you start taking things personally, you stop thinking objectively. You start seeing the market as an opponent rather than an environment. You start fighting to prove you're right instead of working to trade well. That's not trading. That's ego, and ego dulls every sharp edge you've worked to build. Ask yourself, how often do you review your trades without emotion? Can you look at a losing trade and say, I followed my plan? That's a good trade, even though it cost you money, because that's emotional control. It's the ability to separate the outcome from the process. It's knowing that a loss doesn't mean failure if it followed your rules. Emotional traders can't do that. They measure success by results alone, and in doing so, they never improve their decision-making. The market becomes a roller coaster of highs and lows, and every loss feels personal. The traders who master their emotions understand that control isn't about being numb, it's about being centered. They feel the same fear and greed as everyone else, but they don't act on it. They've trained themselves to pause, to breathe, to verify before reacting. That pause, that single breath, is what keeps their edge sharp, because that's the moment most traders lose theirs. Emotional control also comes from preparation. When you know your plan, when you've rehearsed your entries and exits, the market's chaos can't shake you as easily. It's like a pilot flying through turbulence. The wind may shift, the plane may rattle, but the pilot stays focused because he's trained for it. He doesn't panic because he trusts his instruments. A trader must do the same. Your instruments are your rules, your risk limits, your setups. Trust them. Don't throw them away the moment things get uncomfortable. That's when you need them most. There's also another trap: overconfidence. Just as fear dulls your edge, so does greed disguised as confidence. You win a few trades, start feeling invincible, and suddenly your discipline slips. You increase your size, skip confirmation, take marginal setups. The market rewards you once or twice, and then punishes you when you least expect it. Overconfidence blinds you to risk, and risk ignored is the quickest way to ruin. Emotional control keeps that arrogance in check. It reminds you that one good trade doesn't make you smarter, just as one loss doesn't make you foolish. It's the long run that matters. the series of disciplined, balanced choices. A sharp trader treats emotions like weather. He knows storms come and go, but they don't change the course he's set. He doesn't try to avoid them. He prepares for them, because he knows the real battle isn't against the market, it's against himself. Every trade is a test of patience, restraint, and mental clarity. The ones who pass the test consistently, those are the ones who last. The market's pressure never stops. It doesn't care about your comfort or your plans. Prices will rise and fall, setups will fail, and news will shake confidence. You can't control that. The only thing you can control is your reaction. Emotional control isn't about staying calm when things are easy. It's about keeping composure when everything's moving against you. When fear says, get out, but your plan says, hold. When greed says, double down, but logic says, take the profit. Those moments define your edge. Emotional strength also shows up in your ability to accept uncertainty. The best traders live with not knowing. They don't need to predict every move. They know the market's job is to confuse, and their job is to stay clear, headed in the middle of it. That clarity, that cool detachment, is what lets them see opportunity where others see chaos. Because emotion clouds vision, but control sharpens it. A true edge survives changing market conditions. Most traders think their edge is something permanent, a formula, a pattern, or a setup that will work forever. They treat the market like a machine that can be mastered once and for all. But the truth is markets evolve. They shift in tone, in rhythm, in temperament. What worked in one phase stops working in the next. Volume dries up, volatility expands, correlations break. The traders who fail are the ones who don't adapt. The ones who last understand that their edge must be flexible enough to survive change, yet stable enough to maintain consistency. Every bull market breeds a new generation of overconfident traders. They make money easily, mistake luck for skill, and start believing their method is invincible. Then conditions shift. Liquidity tightens, trends shorten, false breakouts multiply, and suddenly the same system that printed money now bleeds it. They blame manipulation, algorithms, or bad luck, but the truth is simpler. Their edge wasn't real. It was a temporary advantage born out of favorable conditions. The real edge, the one that survives, comes from understanding how to recognize those changes early and adjust before the market forces you to. Ask yourself, how often do you step back and analyze whether your setups still fit the current market personality? Do you trade the same way in a quiet, grinding market as you do in a volatile, trending one? Because if you don't adjust your pace, your risk, and your expectations, the market will teach you to. There's no single formula that wins in every environment. What matters is how quickly you can tell when your edge is fading and how calmly you can refine it without losing your balance. In my own experience, the market's behavior changes like the seasons. Some periods reward momentum, others punish it. There are stretches when breakouts fly, and others when every breakout gets sold into. A trader with a true edge doesn't cling to one way of trading. He reads the tape, senses the shift, and adapts. He might scale down his size, shorten his time frame, or wait longer for confirmation. He understands that preservation of capital is part of the edge. The fools keep trading the same way, hoping conditions will return to normal. But normal doesn't exist in the market. There's only now, and now is always changing. You might remember from that earlier video on how fear destroys good trades. Fear comes from losing control, from not knowing how to react when things change. The same principle applies here. When a trader's edge stops working and he refuses to adapt, fear creeps in. Every trade feels uncertain because deep down, he knows his confidence was built on a static idea. But when your edge is built on adaptability, when it's rooted in observation, flexibility, and constant learning, fear loses its grip. Because you know how to move with the market instead of fighting it. Adaptation doesn't mean abandoning your identity as a trader. It means refining your methods while staying true to your core principles. Your edge might come from trend following, swing trading, or mean reversion. But within that, there's room to evolve. For example, a trend trader who can't recognize when a trend is losing strength will give back his profits every time the market turns sideways. A swing trader who refuses to reduce position size when volatility spikes will get shaken out of good trades. A real professional studies these transitions. He adjusts his tools and timing without changing his foundation. That's what makes his edge durable. You can think of it like a sailor who learns to navigate through all kinds of weather. The ocean doesn't change for him, it just behaves differently each day. Sometimes it's calm, sometimes violent, sometimes deceptive. He can't control the sea, but he can control his sail, his angle, and his patience. That's how he survives. The trader's job is no different. The markets are the sea, your system is your sail, and your edge is your ability to keep that sail steady when others capsize. Another part of maintaining an edge through changing conditions is observation. Too many traders stop studying once they start making money. They think they've figured it out. But markets have a way of humbling the complacent. Every few years, something shifts. Liquidity structures, interest rates, technology, trading behavior. The traders who survive are the ones who stay students of the market forever. They never assume. They test. They verify. They evolve. They notice subtle clues. How volume reacts at key levels, how certain stocks move before the index does, how the crowd's behavior shifts around earnings or news. Those little details form the foundation of a lasting edge. It's also about mental flexibility. You can't adapt if your ego's in charge. Pride makes you cling to old ideas long after they've expired. The market doesn't care how long something used to work. It only cares about what works now. So the trader who can admit, my edge isn't performing, I need to re-evaluate, will live to trade another day. The one who insists the market is wrong will be gone soon enough. Adaptability is a form of humility, the kind that keeps you in the game when others burn out. Some traders confuse adaptation with constant change, but that's not it either. You don't switch strategies every time you hit a drawdown. You study the data. You determine if the drawdown is a normal variance or a real signal that conditions have shifted. Then, and only then, do you make precise adjustments. You tweak, not overhaul. The amateur panics and jumps systems. The professional refines and tests until his edge aligns with the market again. Think about how many times you've seen markets that feel different. Maybe volatility spikes after years of calm, or small caps suddenly start leading while tech lags. In those moments, most traders freeze. They don't know what to do because their system wasn't built for change. The few who thrive are those who anticipate it. They've built flexibility into their process, a willingness to sit out, observe, and strike when new patterns emerge. That's what keeps their edge alive through every cycle. The strongest edges aren't mechanical, they're behavioral. They rely less on prediction and more on perception. The trader who learns to read behavior, of price, of volume, of crowd emotion, develops an edge that no algorithm can easily replicate. Because human behavior is what drives every market, no matter how advanced the tools become. When you understand that, when you stay tuned to how behavior shifts under new conditions, your edge naturally evolves with the market. In the end, your goal isn't to find an edge that never changes. It's to become the kind of trader who can sharpen, reshape, and reapply that edge in any environment. Markets will always move through cycles of calm and chaos, of euphoria and despair. Observation and repetition refine instinct better than theory ever will. You can study every book, attend every seminar, and memorize every trading rule ever written, but until you've watched the market move with your own eyes, until you've seen how price behaves under pressure, none of it will truly sink in. The market doesn't reward people who can quote theory. It rewards those who can read the tape, sense the rhythm, and act with precision. That kind of instinct doesn't come from knowledge alone. It's born from observation and hardened through repetition. Most new traders want shortcuts. They want certainty, formulas, and checklists that promise to remove doubt. But the market doesn't operate in neat equations. It moves on behavior, the push and pull of human emotion, and that can't be captured entirely by rules. You develop an edge not by memorizing what others say, but by observing what the market actually does. Every chart, every tick, every swing tells a story. If you're watching closely, you start to notice patterns that no textbook could teach you. How volume swells before a breakout. How price hesitates near round numbers. How false moves trap impatient traders before the real trend begins. Those are the lessons that only experience can teach. Observation is where instinct is born. You start to see cause and effect in real time. You begin to understand how one event leads to another, not because someone told you, but because you've seen it play out 100 times. You might not even be able to explain it in words, but you can feel it. That feeling isn't magic. It's accumulated data filtered through attention. It's the kind of intuition that only develops when you stop trying to predict and start trying to understand. Ask yourself this: how much time do you spend studying your own trades versus studying someone else's strategy? Because your edge is hidden inside your own experience. Every win, every loss, every hesitation, it's all feedback from the market. The more you observe your own behavior and how it interacts with price, the sharper your instinct becomes. Traders who rely only on external advice never develop that internal compass. They're always looking for the next opinion to guide them, always uncertain, always late. The traders who've watched the tape long enough don't need to ask. They already know what's happening because they've seen it before. Repetition builds confidence where theory can't. You don't gain conviction by reading that a pattern works. You gain it by trading it hundreds of times, by seeing it succeed and fail under different conditions. Each repetition carves the lesson deeper into your mind. You start to trust your process because it's been tested, not because it sounds good. That's why real traders are like craftsmen. They perfect their craft through repetition, not imagination. You can't simulate that. You can only live it. You might remember from that earlier discussion on how fear destroys good trades. Fear comes from uncertainty, from not knowing what's going to happen or how you'll react when it does. Observation and repetition destroy that uncertainty. When you've seen a market pattern play out hundreds of times, you stop being afraid of it. You know the rhythm, the pullbacks, the false starts. You know what it feels like when it's real and when it's not. The more familiar the situation becomes, the calmer you trade. Fear fades because familiarity replaces it. That's why practice is the antidote to emotion. Repetition also reveals the truth about your own habits. You start to notice where you make the same mistake over and over. Cutting winners too soon, chasing entries, hesitating on clean signals. You see it not once, but dozens of times, until the pattern becomes undeniable. And that's when you can start to fix it. Most traders never reach that point because they don't trade consistently enough to recognize their own tendencies. They keep changing systems before they ever get to the point of real self-observation. But the traders who stick with one approach long enough to see their strengths and weaknesses in action, those are the ones who evolve. The market rewards the trader who treats it like a teacher, not a lottery. Observation turns every day into a lesson, every chart into a classroom. When you miss a trade, you study why. When you take a loss, you study what changed. Over time, this constant review sharpens your instincts until reactions become automatic. You stop second-guessing because your mind has already absorbed the rhythm through repetition. You act with clarity, not impulse. Some people call it intuition, but intuition in trading isn't guessing. It's recognition. It's your subconscious processing patterns faster than your conscious mind can articulate them. But that recognition only works if you've fed it enough real data through repetition. You can't develop instinct staring at paper charts or backtesting alone. You need to live through live markets, the noise, the false moves, the emotional swings. That's where instinct is forged. Observation also teaches patience. When you've spent enough time watching markets move, you realize that opportunities come in waves. You stop forcing trades because you've seen what happens when you do. You start waiting for alignment, price, volume, timing, and only then do you act. That patience is a direct result of observation. It's not passive, it's informed waiting. You've seen the movie before, and you know when the real scene starts. Repetition reinforces discipline. Every time you follow your rules instead of your emotions, You strengthen the mental muscle that keeps you steady. Over time, discipline stops being effort. It becomes habit. You don't have to think about it. It's automatic. That's the real power of repetition. It trains your instincts to act correctly even when pressure rises. You don't need to talk yourself into doing the right thing. You just do it because you've done it so many times before. Observation without repetition is theory, and repetition without observation is blind habit. The two must work together. Observation sharpens your awareness. Repetition cements it into instinct. You study, you act, you review, you repeat, over and over, until your reactions become natural. That's how a trader transforms from mechanical execution to fluid performance. Every great trader I've known could tell you stories about how they used to sit for hours watching the tape, not trading, just watching. They weren't wasting time. They were learning the market's language. Each movement meant something, and over time, that language became second nature. When they finally traded, they weren't surprised by anything. The market spoke, and they understood it. The trader who watches closely, who records what he sees, who trades deliberately and studies every result, develops an edge that others can't copy. Because that edge isn't written down anywhere. It's built into his instincts. It's the quiet knowledge of how the market breathes, when it hesitates, when it surges. And the thing about instinct, the kind that's built through observation and repetition, is that it doesn't shout, it whispers. It doesn't come from excitement or sudden flashes of inspiration. It comes from thousands of small moments when your eyes catch something others overlook. A subtle shift in volume, a hesitation before a breakout, a pattern that feels slightly off. You can't explain it in the moment, but your gut knows. That's the trader's sixth sense, and it's earned one trade at a time. You see, the market rewards consistency, and consistency only grows out of repetition. You can't expect to trade well if you only show up when it's convenient. The trader who's there every day, who watches even when he's not trading, who studies the flow and the structure, becomes familiar with the market's habits. He can tell when something feels normal and when it feels wrong. That familiarity, that quiet understanding, becomes a compass. You don't get that from theory. You get it from showing up, day after day, through the boring sessions, the choppy days, the emotional storms. Observation also teaches humility. The more you watch, the more you realize how little you can control. You stop trying to predict and start focusing on preparation. You stop chasing certainty and start embracing probability. You stop thinking you need to know everything before acting. Instead, you react based on what's happening right now. Every moment you observe the market without imposing your opinion, you sharpen your perception. Every time you let the market reveal its hand before you move, you strengthen your patience. And that patience becomes part of your edge. There's something else that repetition gives you: rhythm. Every market has a tempo, a natural pulse that most traders never hear because they're too busy trying to force trades. When you've watched enough, that rhythm becomes clear. You begin to sense when the market's energy is building, when it's resting, when it's preparing to break. You learn when to trade aggressively and when to step aside. That sense of rhythm is what separates the natural trader from the mechanical one. It's not mystical. It's the product of endless exposure and focused attention. Ask yourself, when was the last time you sat in front of your charts and simply watched without the urge to trade? When was the last time you studied the market's behavior like a student instead of a participant? Because observation without action is what sharpens the mind. Most traders are too impatient for that. They want to make money, not take notes. But the money flows to those who understand, not those who rush. The best setups don't just appear out of nowhere. They reveal themselves slowly to the trained eye that knows what to look for. Repetition also builds resilience. When you've executed the same plan hundreds of times, small losses don't shake you anymore. You've seen them before. You know they're part of the process. Each trade becomes one more step in a long series, not an isolated event to obsess over. That perspective is born from repetition. It calms the emotions, it anchors your focus, and it gives you endurance when volatility rises. Because instinct isn't just about spotting opportunity. It's about maintaining composure when chaos hits. And the more you repeat, the more subtle your adjustments become. In the beginning, you change big things, your indicators, your entries, your targets. But over time, you start noticing smaller details. The timing of your entries, the context of the trend, the way the tape feels before a move. You start refining, polishing, trimming the excess. That's where mastery hides. Not in doing more, but in noticing more. Over the years, I've seen traders who relied on theory fade away. They knew every indicator, every ratio, every strategy, but they couldn't handle the live market. They froze when it moved fast or broke the rules of their models. And then I've seen traders with no formal education, no fancy systems, but an incredible feel for the market. They weren't guessing. They were reading. They'd spent thousands of hours observing. They had the rhythm in their bones. When the tape changed tone, they knew it instantly. That's not theory. That's instinct earned through repetition. You can't fake that kind of knowledge. You can't borrow it or learn it secondhand. It comes from time spent watching, from mistakes made and studied, from patience practiced over and over until it becomes part of who you are as a trader. Observation and repetition turn uncertainty into familiarity, chaos into structure, and reaction into precision.